Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at Pinduoduo and do a stock analysis on it. It's one of those Chinese stocks that is way down off of its highs from earlier in the year. So I wanted to break down the fundamentals, give you my thoughts, and then give you my Pinduoduo stock price prediction for the end of 2021. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. We've got an awesome community over there. You'll get access to the private Discord where we talk stocks. You'll get links to all my portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send it out so you can follow along. I also send out a lot of swing trade setups, which is what I think is the most valuable aspect. That way you can kind of learn how to identify the things that I look for. There's also a lot of educational resources over there that you can use to take your investing to the next level and become a much better trader. So if that's something you're interested, guys, come over and join us. We would love to have you. Day One Squad, I love you guys. Thank you for your support. It means the world to me. But guys, let's get started. In today's video, guys, I want to go over and do a stock analysis on Pinduoduo. This is going to be very similar to some of those other videos that we've done recently where we're just taking a surface level glance at the overall financials of the company, the overall health of the company, how quickly they're growing, you know, what does the fundamentals look like, to give us an idea as if the company is worth taking a deeper dive and looking to do a more thorough analysis before taking a position. From what I've seen in the little bit that I've looked at it before we started making this video, guys, it looks pretty strong. Again, this is one of those Chinese stocks that is way down off of its highs from earlier this year, but that is exactly where we want to buy stocks, guys. We want to find good companies that the market has mispriced because of an overreaction that is down in those deep value, low risk areas that give us really nice opportunity for upside. And that's where I think the stock is today. Especially, it's came up a little bit over the last week or so, but down at these levels is absolutely where I want to check it out. So today I'm going to try to make the video a little bit shorter than the last couple. Last couple were pushing like 30 minutes. So I'll try to move through this pretty quick. But main thing I want to look at, guys, is go through the last earnings report just real quick. Go through the fundamentals. I'll give you the cash flow statement, and then we'll come up with the price prediction, and we'll go over the chart and we'll wrap it up. So if you guys, I know everybody's kind of freaking out about Chinese stocks, guys, but let me know down in the comments. I want to know if you guys are buying Chinese stocks. If you, I've made quite a bit of videos on Chinese stocks lately. So if you want to see, more Chinese stock videos, or if you want me to stop that, just let me know down in the comments. But if you are buying Chinese stocks, put down in the comments exactly what you're buying, because I'd like to take a look at them and see where you're seeing value at. But first thing, guys, here's the earnings. As you can see here, they did beat by about 65% or 65 cents, and they did miss on revenue. So the Q2 non-GAAP EPS, they posted 44 cents, which was beat by 65 cents. The GAAP EPS was 27 cents is what they posted, which was a beat by 61 cents. As far as revenue went, they did 3.57 billion, which is, I'm pretty sure is American. That might be Chinese yen. You'd have to check on that, but I think it's converted already. Then they did, which is 106% growth year over year, which is very nice growth there. But they did miss by 520 million. Now, that's something you'd have to look into, right? When you're doing a deeper dive, why did they miss on revenue? Is that typical for them to miss on revenue? 500 million is a lot of money. When you're doing 3.5 billion, it's not quite as much, but that's still significant. So you definitely want to look into that. Don't want to just disregard it. Average monthly active users increased 30% on the year to 738.5 million versus a consensus of 759.2 million. Guys, I wanted to show you this because for those of you guys that watched the Wish video I did the other day, their active users, active buyers, honestly, all of their platform metrics were decreasing. They were going down. So their users were going down, their buyers were going down, their average sessions were going down, their time spent was going down, everything. These guys are doing the opposite. They're growing their platform metrics, which is phenomenal. As you can see, guys, they almost have just about 3/4 of a billion people as far as monthly active users every single month. That is insane. very big platform, guys. For those of you guys that do not know, Pinduoduo, which is the ticker symbol PDD, and I might be butchering the name, but is an e-commerce company out in China. They sell a lot of different products. They have a big, they have their hand in the agricultural space. They sell a lot of agricultural stuff over there in China, which is pretty big, apparently. So definitely check it out if you've never looked at it. Next thing, guys, active buyers in the same 12-month period as active, monthly users. They did 849.9 million, so 850 million, which is 24% year-over-year growth. So again, almost a billion people for their active buyers, guys. Very impressive. Then we'll take a look at the balance sheet once we jump in. So real quick, guys, this is the overview. So this is where we're going to jump into the fundamentals. On the overview, I want to look for a couple of things. So the first thing we want to look at, guys, is the volume. We want to make sure it's not an illiquid stock. They've got enough volume that we can trade effectively. So they're doing about 8.27 million shares on their average 3-month volume, more than enough. That looks fine. Next thing, guys, shares outstanding, 1.25 billion. Not too bad there. One thing I want to point out, guys, is look at the percentage held by insiders, 35.54%. Very nice to see, guys. Historically, companies that have higher insider ownership typically perform better than those that do not. They've also got some institutional interest up there, about 26%, which is not bad. Now, the market cap is definitely the one thing that you gotta look at. That's like the most important thing, guys. $120 billion is what this company is priced at right now and valued at. So what we need to identify today with doing a top-down glance analysis is $120 billion worth it for this stock? So we'll have to look. One thing, guys, PE is negative, so they actually have negative earnings. The price to sales is about 10, which is really high. I mean, for a low-end, high value growth stock, value stock, you want about a 10 PE. So theirs is, they're trading for 10 times sales, not earnings. So one thing to keep in mind. But this is what I thought was really nice, guys. Price to cash flow is 30. And we've talked about this in other videos. For those of you guys that are new to the channel, I will invest into a stock that has negative net income, but really good cash flow and a nice price to cash flow metric way before I'll invest into a company with, a good PE or low PE, but really bad cash flow. So something to keep in mind. I value cash flow much more than net income because net income can definitely be manipulated a lot more than cash flow can. Cash flow is just cash in, cash out. As you guys can see here, next thing, gross profit margin, 61%. Very nice there. EBIT margin is poo-poo, 6.39. Come on. Net income margin, -3. Not that great. And really bad return on assets and return on equity. So again, guys, I don't know how much the pandemic affected this company. That's something you'd have to look at, but definitely could do better on EBIT margin and their return on equity and assets. Revenue growth, very, very impressive. 132% in their trailing 12 months. That's exactly what we want to see. Now, when you do have higher valuation metrics like that, 10% price to sales or 30 times price to cash flow when we want it around 15, 20, you got to look at the growth and be willing to pay more for growth, but you got to identify, okay, what am I willing to pay? I think 30 times cash flow for a company that's growing 132% revenue year over year at $13 billion is definitely something to consider. More than just a little. So let's jump in and take a look at the income statement. So guys, this is the revenue. That's the first thing we want to look at. We want to make sure that their revenue is growing nice and consistently, but we also want to make sure that their gross profit is growing and their cost of revenue is not growing as fast as their revenue is. So as you can see here, guys, 72.7 million in 2016 to 13.3 billion dollars in 2021 or their trailing 12 months. That is absolutely insane growth, guys. Like, to put that in perspective, guys, like, that's growing well over 100% a year. As you can see here, 268, 611, 126, 110, 153. So obviously the growth was going down a little bit, guys, up until 2020, but they did jump it up in their trailing 12 months. But guys, when you're up there growing at, when you're doing 10 billion in revenue, essentially that is pretty hard to maintain 100% growth year over year. So that is very impressive, and I think it justifies those little bit higher valuation metrics. Now, if we take a look at the gross profit, guys, still very, very nice. They were growing their gross profit really well. Also, if we look at percentage of revenue, that's where we can see, okay, the gross profit in 2017 was about 60%, and then it was 61% in their trailing 12 months. But they did, almost 78 here. They almost did 79 in 2019. Then they dropped to 67 in 2020. So little bit of inconsistently, couple up years, couple down years, but overall very strong. I would like to see them get that back up over 70. Next thing, guys, is cost of revenue. That's not that bad. You can see that the revenue is growing much, much faster than the cost of revenue. So that is exactly what we see. Okay, last thing before we jump into the balance sheet is the net income. You guys can see really, really bad net income, guys. They went from losing 42 million in 2016 to losing well over $1 billion in 2020, which is, 1.1 billion. Now they have cut it down to 410 million in their trailing 12 months. So, I don't know, how it typically works throughout their year, if there's seasonality or what typically happens. That's something you have to look at. But depending on how they finish up the year, guys, if they could maintain, if they could go from 1.1 billion down to 400 million, and then the next year they bring it down even more, that is something that you would want to look for. You would want to find out what they're projecting and how soon they think that they will become profitable. Again, it's not like, the number one thing I look at, but if they don't ever become profitable, then you're going to have an issue. So you definitely want to find that out. But, definitely not good. Definitely could be. Okay, guys, let's jump over and take a look at the balance sheet. So a couple of things we look for, guys. So we want to look at total current assets over total current liabilities. So as you can see, we've got 22.85 billion on their total current assets. Total current liabilities, they've got 12.4 billion. So they've got more than enough cash on hand to, liquidate and pay off their debts almost twice. So looks good there. Next thing is outstanding shares. So you've definitely been getting liquidated. You want this going down, but you can see 453 million in 2016 up to 1.25 billion in their trailing 12 months or last reported. It hasn't been too bad in the last couple of years. Definitely right there. 1.162 versus 1.238. So again, you want to look and see, okay, are they going to continue to dilute us? Or are they going to start buying back shares? If I was a CEO and my stock was this far down off its highs and I was doing this well and I had this much cash on hand, I would probably start buying back shares, guys. That's like the best way they could reward shareholders. So that's something you want to look at. Are they buying back shares, or do they have a plan to? That's what you would want to see. Or do they need to continue raising money and continue diluting? So, something to look into. Last thing, guys, let's take a look at the cash flow statement before we jump into the price prediction and the chart. This is what I loved, guys. This is why I'm doing this video, because this is insanity. As you can see here, guys, in 2016, and for those of you guys that do not know, the way you find free cash flow is go to the cash flow statement. It's cash from operations minus your capital expenditures, as you can see here. So 126.7 minus 0.3. 1.48 billion minus 104 or 1.4 million, 1.12 million minus 4 million. Look at that, guys. I mean, that is absolutely insane. They are literally averaging like 3 point something billion a year in free cash flow if you were to take a 5-year average. When I did it, guys, I just did the last 3 years. Because I feel like that's more fair, because they really ramped up here in 2018. And when I did it, I was getting a price to cash flow ratio of about 28. That's what I was getting for the metric. And when I was doing my price target, it was a little bit different than the cash flow or discounted free cash flow model we're going to look at, but it wasn't that much off. Guys, one thing I want to point out is they're doing like 41% on average out of all of these years. They've done 41% in their free cash flow margin over the course of the last 6 years. That is huge. Just in this year, in their trailing 12 months, they've done 32%, which is still very impressive, but the year's not over. So, I mean, guys, you don't ever see free cash flow like this. This is very impressive, something you absolutely take into consideration. I am more than willing to pay a 20, 30% price to cash flow ratio for a company like this that's doing $13 billion a year in revenue. Growing revenue at 100% a year, has a 40% cash flow margin, and is growing free cash flow that quickly. I mean, look at that, guys. 1.1, 2.1, 4.3, 4.1, and the year's not over. So very, very impressive on their free cash flow. You absolutely, should be paying extra than just a standardized growth stock that has no free cash flow. So, okay, guys, last thing before we jump into the chart. So this is a simplified version of a discounted free cash flow sheet. So what you do is you come in here and you put all your metrics in, and it will give us a intrinsic value per share of what we should pay for the company today based off of different assumptions. So I want to show you this because this is interesting. So as you can see here, guys, company info is, it was 96.10 cents yesterday when I did the sheet, but I think it went up today. I want to say it's at 107, so let's put that in there. Alrighty, guys. So you can see I put in their most recent revenue, I put in their most recent net income, and then I put in their most recent free cash flow. Now, this is the growth rate, guys. So they're currently growing revenue at around 100% a year on average. I put in 30%. So I put in how much are they going to grow their earnings at for the next 5 years, and I put 30%. I feel like that's rather conservative, but that's fine. Terminal growth rate, what are they going to grow at after they hit that 5-year mark in perpetuity? I just put 5%, pretty standard. And then as far as revenue growth, net income margin, they're doing about 3% in the negative, if you remember from the overview. So I just put it at the exact same, but that doesn't affect this cash flow statement or cash flow sheet. As you can see here, guys, for the cash flow margin, I put 31%. So what they're doing right now today in their trailing 12 months, not what they're doing on average over the course of the 5 years, and I'll show you the difference. But as you can see, this is giving us an intrinsic value per share at $174.60, from its current, metrics or fundamentals. That's about 62% upside from the current levels, guys. That is huge. Very, very nice. When I did the price to free cash flow based off their 2022 and 2023 earnings or revenue, I was getting about $165. So it's about dead on there. If you take the free cash flow margin and you bump it up to 35%, that gives you 197.2 or 20 cents. If you bump it up to 41, like they've done average over the last 6 years, that gives you $230, guys. So I think this company is absolutely fair value right now, if not a little undervalued, and absolutely could go much, much higher from these current levels. I would have to rate this as a very good buy. I just added it to my dollar cost average portfolio this morning, and so I don't plan on selling it anytime soon. It's just one that I buy into every single week. It distributes, over the course of all my stocks in there, and I just let it ride. So I absolutely think this is a very good level. We'll take a look at the chart to confirm if we should now or what we should do, but I love the price point, especially if you have a longer term outlook. Like I said, my price prediction would be on that lower end, around that 165 to 170 by the end of the year, middle of next year. So about a year from now. Now, one thing I wanted to show you, if we just jump that back to the 31, what they're doing now, guys, if we up the growth rate on their revenue from like 30% to 50, see what that will give us. $345, guys. So it's just, obviously these are all assumptions you make, but at the end of the day, I think it's undervalued, and I think it could go up much more. All right, guys, let's go ahead and take a look at the chart. So really nice looking chart, guys. Like I said, this is exactly where we want to find stocks. This is exactly the levels we want to look for when trying to identify a long-term, high conviction growth type of stock that you just buy and you hold on to. You understand that it's going to take some time to get where you want to go. I'm not really looking at this as a swing trade, definitely more of a conviction play or a long-term type hold, for at least a year. But yeah, guys, like we were talking about, deep value areas. As you can see here, if we pull our fibs from our lowest low clear back here in is that 2018 to our highest high, we just broke the 618, which is pretty confluent with that inflection point. We didn't quite get down to the 786, but the 618 is just fine for me, guys. Golden retrace. Where we did find support. One thing I want to point out that I really like to see, guys. So we had the capitulation, right? On a lot of the Chinese stocks, Baba as well, fell below. Tested this level from back here in October and July 20. So you had a candle low close here. You had a couple candle closes and a little bit of an area here. Now, once it tested that, it did fall below it, but then look at that gap up to test that dynamic support resistance at that moving average, and then spring back test a spring of these highs from back here in August of 2020, and July of 2020. Now, this is also where it had some, pretty fantastic price action back in 2020, guys. That's why you call this an inflection point, because couldn't break it. Once you did, though, once you sprung back test a spring, and there's just not many levels in between here, guys, that's going to stop you. So look at the price action here compared to here. Same thing. Moon, back test, gap up. So you could see some very similar type stuff, and you are having a monster day today, up 7.3%. Guys, you also had bullish divergence going into the reversal zone. These are the areas where major reversals happen. Again, deep value areas, low risk levels, a lot of upside here, guys. You also had like kind of a janky rising 3 method, but then you had that hammer candle right there holding the bottom of that range. Really nice, guys, really nice. Now you are under your major moving averages, but both your 50 and your 20 are starting to point up, which is nice to see. What I really like, guys, is on the daily, you've got that RSI that back tested that 50 level and is now sitting at 64 almost, which is exactly where you want your RSI up there in the bullish control zone. It's that 60 to 70 level is where you want it, because that means it's got a lot more upside before it's considered overbought. But nonetheless, positive momentum is building. You're just getting nice bullish convergence right now after that bullish divergence, which is exactly what you want to see. The other thing, guys, is that bullish divergence on the RSI was at those deep areas, those deep levels. You also had that bat action magnet move RSI that Scott Carney talks about down here, which is powerful stuff. So absolutely, guys, this is beautiful stuff. This is implying much more upside. If it can hold this level, I would really like to see it back test it. I wouldn't just jump in here at 107. I would wait for a back test to confirm and show market participants that this level that we just capitulated to, that was some serious resistance back in 2020, is now certainly support. Then once you do that, guys, I think you're running to $160 really quick. If you take your fibs from the high to the low point, from this high to this low, which you also just made your highest, candle weekly close the other day since clear back here in July. But as you can see, guys, that 618, which is exactly where you would want to, take profit at, is right there confluent with that $160 level, which is exactly where I think it's going to go. So I think you could get there quick, maybe even by the end of the year. That 382 is confluent with the bottom of that gap, which is exactly where you would get some price stall. And then the 50% level is right there confluent with those highs from back in May. So those are your areas where you would want to look at taking profit if you are, using it as more of a shorter term swing trade. This is an easy area to plot your stop, right? Because you can just put it right below this gap. You may go fill that gap, but I would wait once you get confirmation, and then you get some follow through price action, like a bullish engulfing or some type of reversal candle, just confirming you're going to keep mooning. Then I would enter. I wouldn't jump in now. But yeah, with that being said, guys, this is a great level of value. You have an easy plot for your stop loss. You've got low risk areas. One other thing I wanted to show you guys. So if we take this this ABCD pattern type stuff here. Here, and we go to the 1272 there. That is absolutely where you could go. So this would obviously be a bearish ABCD pattern, but overall, guys, I mean, that's where you could be headed up there at $250, which I think is absolutely possible. Obviously, there is a ton of work to be done there, and it would take some serious time to get there, but I think that's where you're headed. That's where I would target, if I was holding this for the long term, which I am. So just something to keep in mind, guys, some symmetrical ABCD type stuff, which is absolutely looking like it could be potentially manifesting. Next thing, guys, if we take a look at the weekly, we just had a very bullish, weekly candle close last week, which closed right above that, 98. $99 level. And we are painting a very nice weekly candle this week, but we are not quite done. We've got about 2 days left. We also have bullish divergence on our MACD on the weekly. So we've got, reversal implied, guys. I think these are absolutely the areas where we will start seeing it move back up to the upside. But that's it for today, guys. Let me know down in the comments if you agree with my my price prediction on this stock up there around that 165, 170 area. Also, let me know down in the comments, if you own any of these Chinese stocks or which ones you do own and which ones you see the most value in. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Come join us at the Patreon if you want to be part of an amazing family, and I'll see you in the next one. Peace.